Let me break down some of the common myths with life insurance for you. The two biggest ones being, one, isn't that for people if they pass away? Isn't that all it's good for? The second, well, that stuff's really expensive. Yeah, that's something that we can't afford. That's a really expensive premium, right? They think of it as a cost. And so I'm here to debunk those two myths a little bit. The first one, yes, life insurance is used for death. So your traditional life insurance has two options. You've got term insurance, which the only value to term insurance is if I pass away in a certain timeline. The only value to term insurance is if I pass away in typically 10, 20, or 30 years. I rent it's like renting an apartment. I'm paying my rent or my monthly premium. And if I pass away in 10, 20, or 30 years, I leave my family behind whatever that death benefit is. However, on the other side of the aisle, there's what we call permanent life insurance. And so permanent life insurance has some other nuances as well. It's got the ability to have death benefit for life. So no matter how long I live, it's going to protect my family. It's got this pretty interesting thing called cash value. So the money I put into it over time, it actually starts to build equity. And that equity, I like to refer to it as an opportunity fund. It's money that I can grow out and I can use it for, a down payment on a house, for additional retirement income, putting my kids through college. And so when it comes to permanent life insurance, there's a lot of different designs out there. Sometimes they're cash value focused, sometimes they're more death benefit focused. When you think about life insurance, remember there's two types. There's term and there's permanent. Once we get into permanent, there's a few different things going on there, and I would be happy to sit down with you and guide you through what might be the best type of permanent life insurance for you and your family to look at. So the second one is, well, this life insurance premium is really expensive. And I always tell people it's expensive compared to what, right? Well, is it expensive to put a lot of money into our 401k and have a lot of money sitting there at retirement? No, because that's a contribution. It's not an expense. So the first misconception is if we're putting money into a permanent life insurance policy that's focused around cash growth, it's a contribution. It's not a premium expense. Yes, there's fees and there's cost to doing anything. Even your 401k at work has fees and cost to it, just like a life insurance policy does. But it's a contribution in that case. If we're putting into place a life insurance policy to take care of long-term care needs down the road, and we think those premiums are expensive, well, what's more expensive? The couple $100s a month I'm paying on that, or the $15,000 a month for the nursing care for my spouse that I have to pay now? So it's always looking at it's expensive compared to what, and is it a premium or is it a contribution? Because when I put money away into other assets, I look at as how much do I want to contribute to this? Not how much do I want to lose having to be stuck paying a premium, right? So a lot of it is the way that we view, one, the value of it, and two, what is the intended use of this? Because if it's to maximize our retirement, if it's meant to make sure that if I need care down the road, I'm not stuck with this massive bill every month, if it's got the right intent and purpose behind the use of these dollars and these premium contributions, then is it really expensive? Or is that one of many life insurance myths?